Welcome, curious minds, to the deep dive. Today, we aren't just sifting through, quarterly reports or market analyses. We're entering the realm of epic literature. So forget dry textbooks. We are opening the covers on a chronicle that sounds like it was etched onto ancient tablets. The Saga of Greatland, Conquest of the Paterson.
It really does. It reads like the opening of a grand fantasy film, and that is precisely the lens through which we have to view this particular source. Our mission in this deep dive is to take this saga, which, it uses this sweeping dramatic language and these really powerful literary devices, and extract the very real, often brutal, and frankly strategically brilliant corporate and financial maneuvers that shaped one of the most compelling stories in the modern mining world.
And the narrative we're dissecting is just so rich with ambition and, well, market savagery. We have to be exceptionally clear up front with you, the listener. This saga is an allegory. It's less a historical document and more a chronicle of investor sentiment. It captures that raw, passionate, and sometimes, hyperbolic feeling.
Exactly. The kind experienced by private investors, particularly the ones on chat forums. It creates these very clear-cut heroes and villains.
Which is why we have to talk about.
We do. So plots involving, say, the villainous Judas Gervais or the powerful kings of Newcrest and Newmount. We have to understand that these are used entirely as literary devices. They're there for entertainment. They reflect those really strong feelings, the vilification and the heroism that just attach themselves to corporate leaders during times of intense market pressure. So we're interpreting the myth to understand the financial engineering underneath, not endorsing the characterizations.
Right. And while the saga focuses so intently on the internal struggles of Greatland, we also have to set the external stage. The sources remind us that the whole global environment provided this persistent, dark backdrop to the entire struggle.
It really did.
I mean, we're talking about the global stock market volatility that defined the period during and right after the 2020 pandemic. And you couple that with the rising geopolitical tensions of the last 5 years, these external factors. They contributed hugely to the ambient fear, uncertainty, and doubt that investors faced.
And that FUD, fear, uncertainty, and doubt, that's the central conflict. The saga frames this relentless psychological and financial pressure as a confrontation with the tale of three crones. And these crones, they embody the relentless forces constantly challenging the heroes at, every single turn of the journey.
So to navigate this epic, this incredible tale of corporate survival and strategic mastery, we need a map. And that map is the Lassonde curve.
A classic model.
It's a widely recognized economic model that charts the life cycle of a mining asset. From that initial, intoxicating burst of discovery excitement through the long, draining slog of development, and then finally, hopefully, into the light of sustainable production. We're going to see with remarkable clarity how the crones of FUD align themselves perfectly with the three major ages defined by this curve.
So our mission today is to unpack this entire epic. We're going to translate the high drama of corporate battles and strategic maneuvers into tangible financial lessons, aligning them perfectly with the shifting tides of the Lassonde curve and, of course, the relentless wearing pressure of FUD. So let us begin our deep dive into the darkness to find the gold.
We begin our journey in the Age of Wonder, which is the first phase of the Lassonde curve. The source material, it sets a very dramatic scene. The year of our Lord 2020. The world is dark, it's gripped by plague, it's defined by isolation, and marked by societal friction. It's a time of universal gloom and uncertainty outside the financial sphere.
But amid all that gloom, a blazing light emerges in this arid but promising land, the Paterson, a remote region on a vast continent lying in the kingdom once ruled by King Sandeep of Newcrest. And this is the birthplace of the Havieron discovery.
And the fervor around this discovery, it's described in almost euphoric terms. The saga recounts astounding drill result after drill result, delivering the sweetness of golden nectar normally reserved for the elixir of the gods. I mean, this wasn't just good news. It was a defiant societal lift in a year that was defined by global setbacks.
And that level of consistent high-impact news created just a massive collective investor high. The people of Greatland, the shareholders, they experienced a fervor that was absolutely palpable. It pushed the stock right up to the very peak of that first age of the Lassonde curve with the velocity of a meteorite.
Right, and there was even immense hope for Havieron's potential cousin, Scallywag, raising the thrilling but maybe naive question, could lightning truly hit twice?
But the very nature of the Lassonde curve is cyclical, isn't it? That dramatic ascent was only setting the stage for the inevitable, painful crash into the second and darkest age, the orphan period. And with that descent, the first and most immediate threat, the Crone of Fear, is summoned.
Fear arrives when that initial optimism dies down.
It does, and the hard reality of actually funding and executing a multi-billion-dollar project sets in. The resource is confirmed, sure, but the capital expenditure required to dig it out is immense. The saga describes this crone casting her lasso of the orphan period around the proverbial necks of the Greatland people, just slowly choking out their initial joy and draining their confidence.
And this fear is given a human face in the source material. Judas Gervais. He's the traitorous leader described as having left a legacy of pain. The saga frames him as the architect of the future pain, having left a treasury mostly drained to feed his debauchery.
Okay, now let's pause here and apply our critical lens, because this is where the allegory meets the reality. While the saga's vilification, it reflects that intense sentiment among private investors. The reality is that Gervais was instrumental in structuring the foundation agreements with Newcrest.
Right, the legal nuts and bolts.
Exactly.
Right.
Specifically the 5% option exercise and the last right of refusal, the ROLR. These were complex, necessary legal documents for defining the relationship in the Havieron joint venture. The emotional language in the saga, it's purely about the investor pain caused by the consequences of those agreements later on, not necessarily the complexity of the initial structuring itself.
So, stepping into this vacuum, in the darkest hour of the orphan period comes the prophesied strategist, Sir Sean Smartypants. And his first major challenge, the first Herculean task, was the treacherous contract left behind, the 5% option exercise.
This was the first great financial battle, and it was existential. The 5% option exercise was a contractual option granted to King Sandeep, who is Newcrest, the majority partner and operator, and it allowed them to increase their ownership of the Havieron joint venture from 70% to 75%.
Okay, so let's unpack that. Let's get into the technical reality. Why was a seemingly small increase of just 5% in ownership considered treacherous or even existential?
Because it wasn't just about 5 percentage points of future cash flow. It was the crucial moment right before development ramped up. By exercising that option and moving from 70% to 75%, Newcrest would have significantly increased their operational control and their ability to dictate terms.
So Greatland risk being reduced.
From a powerful minority partner to a highly vulnerable passive financier, their only role would be to fund 25% of this massive capital expenditure without a commensurate increase in influence over how and when that money was spent. That's why defeating it was paramount.
And the battleground was valuation. Sean and his team toiled tirelessly on their submission. And the source material details how this process was governed by rules as rigid as any ancient law, which is where we meet the VALMIN code.
Absolutely. We have to dedicate some time to this. VALMIN is the Australian professional standard for technical assessment and valuation of mineral assets. The rules required both companies to submit valuations using conservative, non-public metrics negotiated specifically within the framework of the code.
Okay, so that's a critical distinction. If you are mandated to use conservative metrics, things like low projected metal prices, high capex estimates, pessimistic timelines, does the resulting number truly represent a fair market valuation, an FMV that the asset would get on the open market?
Analytically, the answer is no. This internal submission was a constrained, risk-mitigated negotiation. It was designed to protect the integrity of the joint venture, not to reflect the market's maximum bullishness. It strips out all that optimism and forces a disciplined, engineering-first approach.
And because of this,
if the two submissions, Greatland's and Newcrest's, had a larger than an agreed-upon discrepancy, which the saga confirms actually happened, the contract dictated that an independent, expert arbitrator was required.
And that arbitrator then had the unenviable task of deciding which of these two conservative valuations was closer to the fair market valuation within that specific constrained framework. The tension must have been immense.
It was a tense proxy battle, but the strategy paid off. Greatland won the valuation decision. Their submission was deemed the closer representation of the asset's value under the VALMIN code. They had successfully defended against the option being exercised at, a lowball price.
Yeah, the Crone of Fear lingered, because despite Greatland winning the decision, Newcrest ultimately decided not to purchase the additional 5%.
And this refusal, the saga notes, was a deeper psychological blow than a straight loss would have been. It immediately fueled the Crone of Fear all over again. The market, with all the drilling data and internal knowledge, walks away from increasing their ownership. Does that mean they doubt the viability of the Havieron project? or question if even this conservative valuation is a true FMV in the open market.
Or, as the sources suggest, this refusal may have been exactly what Newcrest wanted all along. I mean, if they had deliberately submitted a very low valuation, they could have banked on the psychological impact of refusing the purchase if their number wasn't selected. The message sent to the market was one of lingering doubt, regardless of who won the arbitration.
The fear was still paramount, and it was exacerbated by the need for this massive capital injection to transition out of the orphan period. Greatland had won a legal skirmish, but was basically starving for resources. And this brings us to the next epic moment, summoning the ancients.
This is where the narrative shifts fully into the cinematic. Sean, the strategist, stood on a mystical, windswept dune amid a storm in the dark hours betwixt midnight and dawn to summon Twiggy, the ancient god of the ASX. So let's strip away the poetic imagery for a second. What was the cold, hard necessity that drove them to seek that kind of massive capital injection?
The necessity was securing the future development funding without sacrificing the asset entirely. The market was just punishing them. This heavy bargain, as the saga calls it, resulted in the three boons. And these were profoundly interconnected and non-negotiable, which really illustrates the real-life complexity of corporate financing. Sean couldn't get one without simultaneously securing the others.
Okay, let's detail the gifts and their interdependence. First, he received the shield of funding, a syndicated shield of funding from a syndicate of Tier 1 banks in Wailu. This was the raw capital needed to survive the orphan period and start development.
Second, the sword of power. Wailu was established as a new cornerstone investor. This wasn't just capital, this was institutional endorsement. Wailu, being a significant and respected player, provided instant credibility and signaled to the market that a major, informed investor believed in the project's long-term viability.
And third, wise counsel. New transformational board appointments and the building of a world-class team, the trinity of powerful lieutenants. I mean, you need the right people to execute a complex mining development.
And here's the key financial insight, the interdependency. Sean had to ensure the banks, Wailu, and the board appointments were all simultaneously in place. The Tier 1 banks would not commit the massive debt required without a strong, credible, cornerstone equity investor like Wailu already on board. And Wailu, in turn, needed confidence that the governance structure and management team, the Wise Council, were world-class and capable of executing the enormous development plan.
So securing all three interconnected advantages was this complex, multifaceted negotiation. It was designed to provide the financial foundation and institutional confidence necessary to repel the crone of fear and to signal the transition out of the orphan period. A remarkable strategic maneuver disguised by the saga as a mystical summoning.
And so we transition now into a period where the foundational fear has been addressed by capital, but a new, more pervasive adversary takes hold. Uncertainty. The age of giants is upon them, fueled by external market forces.
The crone of uncertainty thrives on ambiguity, doesn't she? The saga explains how the fickle markets took the entire drama of that cursed 5% option exercise, regardless of Greatland winning the arbitration, and treated it as a valid price discovery event. Which means that even a conservative, constrained valuation, once it's made public, creates a low ceiling for the asset's perceived worth. It plants these deep seeds of uncertainty.
And the volatility wasn't limited to Greatland. It extended dramatically to their partner, the Kingdom of Newcrest. The crone of uncertainty began working her dark magic there, spreading dissent and leading to internal strife. We see Queen Sherry displacing King Sandeep, which signifies massive internal instability at Newcrest.
And this instability attracted an even greater power. King Tom, ruler of the Kingdom of Newmount, a true global giant in the mining industry. King Tom arrived, placing a spell of acquisition upon Greatland's partner. This was the massive corporate assimilation of Newcrest into Newmount, driven by the dark lords of the markets, which is the saga's colorful way of describing the major investment banks who dictate the terms of global M&A.
And suddenly, Greatland's fate was intertwined with this immense global entity. Uncertainty reached its peak because while King Tom was powerful, the crone immediately bent his mind towards thoughts of lands far away and towards abandonment of the Paterson. So this meant Greatland faced the prospect of dealing with a new, massive partner who would inevitably prioritize portfolio optimization and likely seek to divest non-core assets.
This was a clear moment of danger. I mean, the asset they had fought so hard to save might simply be sold off to the highest bidder without their consent. But King Sean, the strategist, knew he had a hidden weapon built into those foundational agreements. He drew up the great spell, the right of last refusal, or RLLR.
And the saga heroically attributes this sacred spell to the wise man Callum, he who is blessed with the ability to seek precious metals. Again, we have to acknowledge the chat-bold sentiment at play here. Callum is credited heroically with structuring the ROLR, which balances the vilification given to Gervais for the option exercise. In reality, both men were involved in structuring these legally critical contractual details into the original joint venture.
So what exactly is the ROLR? What does it do?
It is, quite literally, Greatland's defensive shield and their offensive sword. The ROLR meant that if Newcrest, or the new majority partner, Newmont King Tom, decided to divest the Havieron asset, Greatland held the contractual right to match any rival bid. They got the final say. They could step in and purchase it for the same price offered by the highest bidder. This ensured they could never be outbid on their most critical asset.
So King Tom, bent on optimizing his sprawling portfolio after the acquisition, he decides on the battle of divestment. He sought to streamline and exit the Paterson, but here is the moment of strategic genius, the true masterstroke. Newmont packaged both Havieron and the adjacent Telfer mine together for sale.
And this packaging decision, this was the crucial lever that amplified Greatland's advantage. At the time of divestment, the massive Telfer mine, which was decades old, was considered near its end of life, EOL, based on Newcrest's known reserves. So to a rival bidder, Telfer represented aging infrastructure and a potentially enormous rehabilitation and closure liability, which kind of balanced the appeal of Havieron.
But the ROLR gave Greatland an advantage that went far beyond just matching a price, didn't it?
Oh, massively. Think about it from the rival bidder's perspective. They saw Havieron, a world-class high-grade discovery, and they saw the established Telfer infrastructure. Critically, this existing Telfer infrastructure made Havieron a brownfield development project, which is exponentially more valuable than a greenfield site that requires massive time, capital, and permitting just to build a processing plant. So rival bidders wanted the prize in the infrastructure, and they wanted it all seamlessly.
So if Greatland exercised its ROLR only on Havieron, what did the rival bidder end up with?
They'd be stuck with the EOL Telfer asset on its own, a massive operating liability dependent on dwindling reserves. Buying Telfer alone was of far less value to those rivals. They would then be reliant on Havieron or owned 100% by Greatland for their remaining infrastructure throughput, based on Telfer's known limited data. And most critically, they would be tied into potentially unfavorable existing joint venture arrangements on Havieron, or like toll processing fees and terms that they had not negotiated themselves with Greatland.
That is a perfect strategic trap. A truly perfect trap. The rival bidders couldn't bid high on the entire package because of the Telfer liability, and they couldn't just get Havieron because of the ROLR. If they bid high, Greatland could match and leave them with nothing. If they won the combined package, Greatland could still use the ROLR on Havieron, leaving them with the expensive EOL Telfer.
The saga calls this a wild magic that repelled the suitors. In financial terms, it was a perfectly constructed structural asymmetry. Greatland was the only logical buyer because they could integrate Telfer and Havieron into a single, cohesive, long-term operational plan, turning the EOL liability into a brownfield asset. For any rival, Telfer was an albatross. For Greatland, it was the key to unlocking Havieron faster and cheaper.
And this strategic setup proved insurmountable for the giants of Newmont. Sean led Greatland into agreement with King Tom, winning the field of acquisition and seizing the mantle and crown as the king of the Paterson, ruler of both Havieron and Telfer. The crown of uncertainty had been defeated, replaced by the certainty of full ownership. The orphan period was finally over.
The victory was massive, celebrated across the lands, but the saga immediately shifts its tone, reflecting the stark reality of the post-acquisition period. We enter the age of toil, the third phase of the Lassonde curve. The excitement of acquisition is replaced by the sheer difficulty of execution.
The warriors are described as exhausted. They paid a steep psychological and financial price for staying the course. This sense of prolonged struggle ushered in the most insidious adversary of all, doubt.
Doubt is the eldest crone. She's subtle, she eats away at the soul, stealing belief even after a victory is secured. She thrives on perceived stagnation and exhaustion. The age of toil is defined by massive capital spending, engineering challenges, long timelines, and little immediate return. I mean, it's the perfect breeding ground for doubt.
The saga captures this perfectly with the Sisyphus analogy. The eternal task that grants no respite, as every day the boulder is rolled up the mountain, and yet as it nears the summit, only to roll back down to be pushed up yet again.
Yeah.
That resonates so deeply with investors who survive years of volatility only to face the hard, grinding work of development.
And adding to this toil was the dual listing challenge. The loyal troops were required to toil by day in AIM and by night in the ASX. This speaks to the volatility and the market differences between London and Sydney, where victories gained at night would dissipate by morning or vice versa. Maintaining market value across two different trading cultures is just an exhausting endeavor.
And the crone dealt a major blow through market mechanics, summoning the demon of Macquarie through the malignant dark magics of the ASX. This allegorically refers to periods of significant sustained short selling or highly influential negative broker reports that amplify existing market doubt, often exploiting market opacity to drive down the price.
And it's important for our listeners to understand how this dark magic operates. Doubt can be amplified when sophisticated players can execute large trades, specifically short sales without full market transparency, thus creating downward pressure on the stock price and feeding the perception of weakness. This is where King Sean realized he needed to change the rules of engagement in one of his markets.
So, he drew upon the final mighty spell in the dark days of winter 2025, the spell of sets. Let's dive into the technical mechanism behind this.
Okay, so the spell of sets refers to the London AIM market trading system being adapted to a more transparent, order-driven system called the Securities Exchange Trading System. Critically, this applies only to the AIM market, not the ASX. The company remains dual-listed.
So how does changing a trading system defeat the Dark Lords?
In essence, it loosens their invisible yet insidious grip on the markets. Before sets, the AIM market relied heavily on a quote-driven system, which often allowed market makers more flexibility and opacity in trade execution, which can be exploited by sophisticated short sellers. By shifting to an order-driven, transparent system, it withers the ability of those utilizing complexity or opacity to strategically control trade routes and suppress the share price. It's a move toward greater market efficiency and less manipulation potential in London.
That is a fascinating strategic move-fighting market. Doubt not through operational news, but through technical governance reform. But there was another, far greater operational victory brewing, one tied to the asset they acquired alongside Havieron.
Absolutely. As the grip of the Dark Lords weakened, Sean began to reveal the hidden, transformative value of Telfer. Remember, when Newcrest divested, Telfer was considered near EOL. But the meticulous work Greatland conducted in terms of focused exploration and resource development of the Telfer mine, it proved that it has many, many years of production ahead, significantly longer than anticipated when it was merely an optimization problem for the prior owners.
And this realization, it transforms the entire financial outlook. It defeats doubt at its source. Telfer is now capable of generating substantial, long-term free cash flow, FCF.
And FCF is the ultimate armor. This extended lifespan and robust FCF from Telfer gives Greatland crucial optionality. And optionality is financial freedom. They now have the internal financial cushion to potentially develop Havieron without needing to fully utilize the entirety of the debt funding arranged with that syndicate of Tier 1 banks.
So they are no longer completely reliant on external financiers. It gives them better control over the pace, the scope, the direction of the Havieron development. They can manage their debt load, reduce exposure to volatile capital markets, and essentially control their own timeline for achieving full production. This financial self-reliance is the moment the crone of doubt truly crumbles.
The age of toil yields its reward. The grip of the Dark Lords weakens, and the long-prophesied third age, the Lassonde curve, the age of prosperity, dawns. As the king of the Paterson finally sits on his golden throne, not merely surviving, but thriving due to strategic insight and hard-won operational victories.
The tale draws to a close with a poignant philosophical reflection, recognizing that even the greatest victories demand sacrifice. The saga emphasizes the toll taken on the warriors, the ravages of time leaving no man or woman unmarked, with illness, injury, and death, both metaphorical within the corporate structure and literal among those who endured the long years.
And the source material offers this wisdom. Victory and life itself are forever bittersweet, as the greatest of victories oft demand the greatest of sacrifices. It's a reminder that beneath the financial gains lie years of grinding effort, dedication, and personal cost. The warriors toast their victory, but they must always salute the fallen.
And the epilogue returns to Sean, the man who navigated the three ages of the curve and defeated the three crones. He stands upon that same windswept dune as the year 2025 draws to a close, embodying the wisdom gained from years battling fear, uncertainty, and doubt.
His final insight is the most profound lesson of the saga. He understands they can take but a brief respite because the dark forces of the markets will never cease their deadly arts. It's an acknowledgement that stability is not permanent. It requires constant vigilance, and that the nature of capital markets means the strategic war is never truly over.
This shift from a frantic battle for survival, that's fear and corporate control uncertainty, to the long, difficult yet rewarding path of building an enduring legacy, which is doubt overcome. It's a powerful metaphor for any enterprise. The Paterson, in his mind, is merely the spark.
The spark of empire. The saga makes it clear that King Sean's heart knows this is just the beginning. He gazes far into the distance, seeing the Paterson as the catalyst that forges a new empire, the birth of an empire that will one day reach across nations. New allies, new partnerships, new enemies will inevitably emerge. More tales yet to be written in this ongoing corporate journey.
What a dense and thrilling deep dive. We started with the intense psychological warfare of the orphan period and the necessity of mastering arcane rules like the VALMIN code. We progressed through a masterclass in contractual negotiation, using the RLR and the Telfer packaging strategy to defeat the giants. And we ended by witnessing how operational success at Telfer provided the crucial FCF optionality to overcome the insidious crone of doubt.
I think the core takeaway for you, the listener, is this. In high-stakes corporate drama, look beyond the headlines and the sentiment. Examine the underlying contracts, the leverage points, and specifically the often overlooked assets like EOL infrastructure that can become game changers when integrated by the right strategist. The difference between a crippling liability and a powerful competitive advantage often hinges on vision and execution.
And as the saga itself concludes, let's leave you with this philosophical thought to chew on. What is an ending when all is said and done, other than just a new beginning? The crown of the Paterson has been won, but the forging of the empire awaits. We look forward to the next chapter in Greatland's journey. Until then, keep digging and stay thoroughly informed.